And we were talking about how great of a market it is because it's a nice, slow mover. I
Hmm.
mean, you get a Forex market to move 1 penny, 1 cent in a day. That's a decent sized move. Welcome back to Investing with Confidence. I am your host, Joshua David, an online trading academy, the sponsor of Investing with Confidence, teaching people just like you and actually on their 25th year teaching those skills for trading and investing, whether it's for short term income potential or maybe you're just managing an IRA or a 401k, so that longer term perspective of investing. And as I alluded to in the last segment, with market timing. We're told you can't time the market for these reasons. Well, who's telling you that? It's the brokers, the advisors. Well, we believe you can if you're being educated, but you have built the skill. You need to build the skill of timing the market. And
Hmm.
that's what it comes down to no matter what you're trading. So let's talk about that within the Forex market. We talked about futures in the last segment. And just so our listeners understand, the Forex market is currencies, the dollar, the yen, the euro, the Swiss franc, the Great Britain pound. So you're trading one exchange rate against another.
Correct.
Great opportunities, and a couple of different reasons. I was actually having conversations with some people yesterday, and they were talking about the Forex market. And we were talking about how great of a market it is because it's a nice, slow mover. I
Hmm.
mean, you get a Forex market to move 1 penny, 1 cent in a day. That's a decent sized move. So,
Yeah.
talk about why people are really gravitating towards the Forex market, how our listeners might be able to use that as an opportunity for income potential.
Yeah, there's some great versatility. There's a number of advantages. And by the way, let me get back to that timing thing again.
Yeah,
You're telling me we can actually time the market?
we believe you
Well,
can.
we are actually in agreement on that. And why you've been told you can't is that the people that are telling you that either number one don't know how to do it, or they want to make sure you don't know how to do it because then you won't need them. And it really gets down to what is timing. It and what is the important part of it? It's being able to identify or time the turning point in price and then how far that is going to go. Those are the two primary components. Well, when we talked about a number of different markets, we talked about the futures market. Now we're talking about the Forex market. Can you time each of those? It really doesn't make any difference what the asset is. Basically, what we're doing is we're timing the change in price of anything. And the way we're able to do that is we're just showing you how to follow the people that are actually changing the price. And that's how we keep it simple. The foreign exchange market is a great asset for, especially for people that are starting out with small accounts, because there is such great leverage there. It allows you to have a small amount of money in a margin account and control a much larger total investment, maybe as much as 50 to 1. And that is great benefit for you. That provides a great benefit, allowing you to have a smaller amount of money. So for people that either are starting out with less or people that have a lot but are a little reluctant to put a lot of it into the stock market, you can take a small portion of it, and the rate of return that is available with because of that leverage, it really minimizes the need to have a lot of money into a single stock position or a stock portfolio.
Yeah, there was actually an article. I think we talked about this a few weeks ago about the one of the reasons why people are not in the market is because they feel like they don't have enough capital.
Sure.
Well, that's true with stocks. You actually need a lot of money to trade stocks. If you're going to trade more than 4 times per week, you'll need 25,000 in an account. Why not use these other assets that give you opportunities with less cash? It's
Right.
just more being more capital efficient, and I believe everybody wants to do that, but they just don't know how. Al, you
Right.
actually dissect that in these investing classes. You talk about the Forex market, how that might be used for people that want to have income potential, how to do that, how to have the opportunity to time the market as you were talking about. There's
Hmm.
ways to do that. And how do we do that? We talked about that in the first segment. First, you got to find out who's moving the market, and then you got to trade like
Yeah.
them. So I'll continue talking a little more about the Forex market. We all know now that it's currencies. You're trading one exchange rate or
Hmm.
kind of like almost like one country's economy against
Oh, that's
another.
really what you're doing. Right.
Now, with it moving really slow, and we have inflation right now that's impacting a lot of things, which the Fed may need to do something with interest rates. So, with understanding interest rates and understanding the currency market, how can everyday people or everyday investors really kind of use that in collaboration as an odds enhancer in their timing?
Yeah, well, when you were talking about inflation, that's a big issue right now. A lot of people are concerned about it, and one of the things that is going to happen eventually, the Fed will raise interest rates, and they've
Hmm.
already talked about being able to do that. Does that impact our currency, the value of our currency? Absolutely. So those are the things that you can look at. Countries are doing different things around the world that we can use to benefit in that particular part of the market of the forex market. There's always something happening in different countries. There's always something moving somewhere in that asset. So
Yeah.
that's a great thing about watching something like what's happening in this country
Hmm.
and then looking at what might be happening somewhere else and being able to put a pair together, because
Yeah.
in the forex market they trade as a pair. It's one trade, but you're looking at two different currencies where you're looking at one you feel is going to go up in value and the other is going to go down in value.
Yep. And with the forex market being the largest market out there, that really affects the stock market. That
Yeah,
affects the futures market. That affects real estate. I mean, that affects our economy as well, because if we raise our interest rates, our exports don't look that sexy, is what they call
sure.
on the streets. It's not as sought after. So that'll affect our economy as well a little bit. So understanding these, that way you're not at, I guess, not necessarily at risk to what's happening, but have an opportunity to maybe hedge your portfolios,
Sure.
using that as protection. You know, when currencies are going up, the market might be going down, and if that's typically what happens with the U.S. dollar, it's inverse correlated
Yeah.
with the stock market.
Yeah, one of the reasons that a lot of our students go on to learn about different assets, even if they don't trade them, one asset category can influence something else. Like what's happening with interest rates, for example, what's happening with the value of the dollar. That definitely impacts our exports, our imports. It really impacts everybody, whether you're in the market or not. But a lot of people will look at what's happening in the foreign exchange market, in the currency markets, and then use that to make better decisions, maybe even in the stock market. And most people are familiar with the stock market. You mentioned the Forex is the biggest market that's out there, it
Yeah.
trades over $5 trillion a day.
Hmm.
Isn't that the interesting thing that what most people are exposed to is the smallest market that there is?
It's one of those things, they do as I say, not as I do. The institutions are telling you listening right now to be in the smallest, weakest, the I guess less opportunistic
Right.
asset that's out there right now. Even with markets at all time highs, look at the Buffett indicator. Not a good
Yeah.
time in the way that says.
No, what the Buffett indicator is telling us is that we may be faced with negative returns or certainly low returns for the next 10 years.
Yep.
And there's a reason. Why is the Forex market so large? Why is the futures market larger than the stock market? Well, the big players are using those markets. Isn't that interesting that they use them? That's what they invest in, but they're putting their clients into the smallest market that's out there that really is a long term type market.
Yeah, it's pretty interesting how they do that. It's facilitating international trade and investment. It's the largest out there, the biggest and the baddest. That's why we're seeing so many people want to understand more about that forex market to get in the arena and understand how that really works.